What's up, traders, and welcome back to another weekly series video where I'll be covering everything about the market. A lot has happened. I apologize, there was no videos the last 2 weeks. I was actually on a business trip in Hawaii, but now I'm back. A lot has changed. A lot of what we predicted did play out. We did initially have this run up here that probably faked out a lot of people. It was another bull trap, and then when FOMC came, we had this huge drawdown as well as quarterly OPEX on September 16th. So a lot has changed. I'm going to be going into a lot of things that are happening in the macro economy, the real economy, as well as what's going on with the Fed. And then we'll also dive into the S&P 500, the NASDAQ, small caps, the Dow. We'll look at some stocks like Apple, Google, Microsoft, and Tesla, where I think those are headed. And then there's a lot of good setups, good plays that are happening right now. Mostly RIVN, Plug. We predicted Netflix was going to top out. That looks like a great setup. New one is GoGo. And then we have Zoom and GameStop. So I'll be covering all of that in this video. Stay tuned. Make sure you hit that like and subscribe. Let's get into it. So first, looking at the S&P 500, you'll see here that from June, we did have that quarterly OPEX. And then from there, we had this pretty huge reversal to the upside all the way to the top of this trend line. We rejected off of there on SPY, and then we headed lower as we approached September OPEX, which was the next quarterly OPEX with quad witching, which is kind of what I've been playing on this market. You have these huge swings. You have these huge moves to the downside. Everyone thinks that the market's going to crash, and then you have this huge reversal, bear market rally, and same thing plays out from April to June, from June to late August, September. And then now we've entered another cycle, which I think will break these lows and head lower on the S&P 500, probably through October. We might have some sort of reversal around midterm elections in November or late November near Thanksgiving. So that's something to keep your eye on. We did have a pretty strong push to the downside after the FOMC meeting on September 21st when Powell raised rates 75 basis points. So this might actually flag out. We might chop around in this demand zone, but ultimately I do think these lows will break. If you actually look at the Dow, we did break below the lows and close below the low in June. So that was pretty significant. If you're following me on Twitter, I talked a lot about how I think that stocks in the Dow holdings had a lot more room to fall, and you saw that kind of play out. And then looking at tech, similar setup, got close to lows in June. Same thing with small caps. This was more of like a bear flag that played out. It's pretty obvious that this was going to break down to the downside. And before I get into some of the stock setups that we're looking at, I just want to cover just like what happened with the FOMC because I think it's important. So you can see here the press release on the Federal Reserve website. They raised rates 75 basis points to 3.25. Here's just kind of a bunch of different bullet points, headlines, some language that Jerome Powell used during his press conference, which I thought was important. They see a path of rate increases continuing through 2023. So they're still sticking to this restrictive policy, quantitative tightening. All of these things are really bearish for equities. So I still think the market is going to head lower over time, but that doesn't mean that there's going to be a lot of opportunity on these bear market rallies. Bear markets are very volatile, and they like to swing back to the median, if you will. So you'll continue to see these press downs and then these huge rallies to the upside. And I think most of the time that is going to happen between OPEXs, either on a monthly or a quarterly cadence. So that's something to be aware of. FOMC decision apply, traders see an 89% chance Fed raising rates another 75 basis points at November meeting. I think that's closer to 80% right now, but I think that's probably the median bet that they'll raise 75 basis points in November. I think it's on the 2nd. Powell has also talked about the housing sector, that it has weakened, but they'll have to continue to see a correction in housing. And for that to really happen, you'll need to see layoffs. And so unemployment has remained relatively low, but it hasn't really gone to the upside yet. I think most companies are on hiring freezes, and they're trying to cut costs elsewhere, but at some point they're going to have to cut humans. And I think you'll see a lot of layoffs in the next 3 to 8 months. They still see inflation to the upside. The pace of rates will depend on incoming data. So obviously CPI data that release in October is going to be important. So that's something to look out for as well. That could either force the market lower if it remains high, or if it is lower than expectations, then you could see a rally to the upside. So that's just something to look for as well. Soft landing is very challenging. Now he's actually acknowledging that there could be a recession and how deep one would be. He's saying that he doesn't know the odds of recession. Yeah, sure. It's pretty much 100%. They still see 125 basis point hikes by year end, which would put us around 4.4%, I think was the median Fed funds rate by the end of the year. Housing has to go through a correction to get back to a normal price growth. Bostic, just some other words here, inflation. We need to have a slowdown, likely to be job losses. They are not expecting to have to lay off people soon, so they're going to continue to maintain a restrictive policy because unemployment does have to go up for inflation to actually have any sort of change to the downside. Then I thought this was interesting. The dollar index hit a 20-year high, 112.3. The euro has been going down. This is pretty common with Forex. There's a flight to safety. The US dollar is a safe haven currency, and as well as rates going up, most people are flocking to dollars. And so you've seen DXY, the dollar index, moving higher. And then, of course, there's just a bunch of data here about manufacturing, PMI, and you'll see that anything under a 50 reading is actually contraction. Anything over is expansion, and you'll see that a lot of these countries are starting to weaken or get near that contraction level under 50. And so the real economy is starting to roll over, and I think that will continue. But at some point, Jerome Powell is going to want to stop raising rates, and that will likely be when unemployment continues to tick higher. And so the market will try to time that and predict and bottom out once Jerome starts to become more dovish, stop raising rates, stop quantitative tightening, even lower rates. And when that happens, the market's going to rip to the upside, and that's really where you want to position yourself. Probably a few months before, buying as much equities, stocks, risk assets as possible, because I think that's when the actual market overall will bottom. I always like to start out looking at Apple just because it's the largest stock to get an idea of where the market is headed. You can see here that it did have this huge rally from June to late August, and then it topped out at the top of that range that we had before, and it's been heading lower ever since. It's actually been holding on quite nicely around 150. You can see here the SPY is trading near its June low, but Apple has retained its value. I do ultimately think for the S&P 500 to break below and print new lows, Apple will have to sell to 138 to 140 is my target. Most of the contracts that I'm in are already over 100%, so I wouldn't recommend entering the trade at this point. There's a lot better risk to return ratios out there, so I'd just hold off on Apple, but just something to keep in mind. Looking at Google, this is an interesting one. Google formed this massive bear flag over a few months and then finally broke down below. This bear flag, to get an idea of what it's targeting, you'll take the low and high of the pattern and then move it to the breakdown point, and that's around $85 to $86. So I do think Google ultimately will trade down there. Its pre-COVID highs were at $76, $77. It's just some level that I like to look at because I think a lot of these stocks like Facebook, Netflix, Amazon will ultimately reach those highs and retest them. For this trade, I wouldn't want to enter it today just because it already has sold. I think this is around 20% that it's already sold already. When I'm looking to enter it into a put contract, I always like to look what pattern it's forming. So you'll see that it was forming this flag. And a good entry point would be around the top of the flag and play puts to the upside. You could set your stop loss a bit higher above the top of the flag so you can cut out, and then you can do either the lower the flag, and then if it breaks through, then you're really making a great profit on your trade. So that's something that I like to look for. Alternatively, you can just enter, where it actually breaks down, and then set a stop loss a bit higher, assuming that it's going to continue to follow through that pattern and head to the downside. You could have that all the way down to 85, but most of the time you'll want to start taking profit as the trade is going in your favor. Looking at Microsoft, this one actually broke below its June lows. It's something to look at. 191's the pre-COVID highs. Not really any great setup here. I do think this will ultimately go lower, probably around this 215 level, and then probably have another bounce, but not in any great setup today. Looking at Tesla, this was interesting because we did have this call out that it would try to push to the upside. This would be a great entry point around 340. It actually rejected here 3 times, as you can see, at 315, and it's headed lower. If it breaks below this 275 level, then it's certainly possible we could just be off to the races to the downside to around 208. I think they report delivery numbers on October 1st. I could be mistaken, but that will obviously be a catalyst, and I think there will be a strong move to either direction here. If it goes to the upside, I'm going to be looking to hit that short right around 320 to 340, just depending on when it actually gets there. And then obviously, if it breaks to the down to the downside, you could have a position in here already to take advantage of that. A great setup that I'm looking at today is RIVN. So also in the EV space, this is going to be somewhat correlated to Tesla, but you can see here it's forming this pretty substantial bear flag. And if we take the range of this flag here, we'll just assume that this was the high. If it does actually break down here this week, then we could see a move down to $12. So I've been buying puts near the top of this flag. I bought puts here, bought puts here, and I'm giving myself a lot of time. I'm targeting December and even into March with an expectation that I'll reach $20. This stock is very overvalued. You can see here that the market cap is $30 billion. Let's see if it has price to earnings ratio. It's negative earnings. Just grossly overvalued company overall. A lot of the EV stocks are as well. We can move to plug. You can see here that this stock has just been ping-ponging back and forth between support and resistance. It rejected 3 times here in this supply zone, broke down below 25. It's going to head to 19, maybe even back down to $13 a share. So this is a decent trade. Probably some more room to the downside on some short-term contracts. Overall, it's going to depend where Tesla goes as well. Netflix, this is one that we talked about. It came right back up to our level around 250 and rejected. So you can be entering puts at around this 250 area and have an expectation that it'll probably travel back down to 160s. This is just a good trade overall. GoGo, this is a new one. So GoGo in-flight communications. This is in like a huge bearish setup, and you can see here that if we draw a trend line where it was holding this pattern before, this is all the way back from September of 2020. They had this Spectrum ATG contract patent that was passed to give them exclusive rights to air-to-ground communication, and then it had this huge run up to the upside. This is just a terrible company in my mind. It's like business Wi-Fi for business flights and private jets. Overall, I think this is a dog shit company, and we're going to head a lot lower. Some notable people that I know are long this stock right now, even in this terrible technical breakdown. After it broke down lower, hit the retest, and it's breaking back down lower. I do think that 100% it's going to go back to $8. And, if I was going to bet someone, I bet it's going to go back down to this $3.90 to $4 level. So contracts are not all that great on this stock. You could outright short it. but I do think that in the next couple months, we'll probably see $8, and then probably by March, April, May of next year, it'll be trading for $4, even back down to $1.50. Overall, a terrible company. Looking at Zoom, this is one that I actually want to go long. So I do think that it will come down and retest that low around $60, and then it's going to have that bounce to the upside. So this is just something that we're waiting for. You can see, like I said before, that this is going to continue to probably try to get down to that 60 level. It's still got quite a ways to go. I know it doesn't seem like such a huge move, but on a percent basis, that's actually a pretty large swing. And so it's going to take some time for Zoom to actually get down that low. And that's the same thing with GameStop. So you're going to have these technical levels that play out. And I'll probably cover in my next video. I'm actually building a model for Zoom. So we'll take a look and dive into the financials and see if it's actually a viable business to hold long term. A lot of people think that it's just like individual, FaceTiming, video conferences, but a lot of businesses and enterprises are paying a lot of money for Zoom, and honestly, it's just a better product. We use it at my company, and it's way better than Google Meet, WebEx, Microsoft Teams, etc. So I do think that there is a place for Zoom in the marketplace, but whether or not you want to pay a certain dollar for it, that has to be determined, and so this model will help figure that out. If you're interested in seeing this at all, you can head to our Discord. We have a free trial that will give you access to this, as well as if you want to sign up for our premium server and chat room. I think you'll get a lot of value out of it. Looking at GameStop, though, this is the same thing as Zoom. I think we're going to go back down to this 1942 level. We're going to retest that 100%. Ryan Cohen sold out of BBBY, and so there's a lot of risk for those who are also in GameStop, because what if Ryan sells and people start to capitulate, all the apes are crying about it. I do think that ultimately we'll get back down to this like $10 to $11 range, which is what I've been targeting for months now. And when that happens, there's going to be a huge face ripper rally to the upside, probably over 100, 200, 300%. There's going to be a huge short covering rally that happens on GameStop. That's similar to what happened to Bed Bath & Beyond. When it came down to that 450, 460 level, we had that huge rip all the way up to $30. So I think this type of move that happened, which was 550%, is probably what's going to happen on GameStop. And if you are trying to take some risk, you could probably even time it again with Bed Bath & Beyond. I think it will hit this low again around like 450. Maybe it'll come back down to that 343 level. So like it's going to sell down to here again, and maybe it'll rip up again, but it's probably not going to go to $30. I'd guess that best case scenario, it could come back to $12 if there is some sort of short covering rally, but it's probably only like maybe to $6 or $7 best bet. But GameStop, I think with how many people are obsessed with GameStop, it's like the original meme stock. I mean, it could go all the way to $60. It could even go up to like $90. I just wouldn't be surprised to see some sort of huge swing on GameStop. But best case scenario, I do think it'll at least like 2 or 3x on price. So that's like $30 or $40. And you can make a ton of money playing options to the upside. So that's it for this video. Hope you enjoyed. I would just, be wary of what's going to happen over the next month. I'm going to put out another video next week. Make sure you follow my Twitter. I'll try to keep you guys up to date as much as possible. If you aren't in our Discord already, make sure you join. It's completely free. And I'll see you in the next one. Take care. Bye.